Welcome back to the deep dive. I have to be completely honest with you right off the bat today. When I first looked at the stack of research, the technical notes, the architecture diagrams for this deep dive, my eyes didn't just glaze over. I mean, they rolled firmly into the back of my head.
Yeah, the topic on the cover sheet doesn't exactly scream edge-of-your-seat thriller, does it?
No, partner determination.
Right. It sounds like something invented specifically to bore people to death in a windowless basement conference room.
It really does. It sounds like dry, bureaucratic, completely invisible tech jargon. But, and this is a massive, but as I actually started reading through the notes, and especially digging into the horror stories of what happens when this goes wrong, I realized I was completely wrong.
Oh, completely.
We aren't looking at a boring settings menu today. We are looking at the invisible nervous system that defines the entire reality of global commerce in an SAP environment.
That is a much, much better way to frame it.
Yeah.
Because that is exactly what it is. It's the engine under the hood that nobody looks at, until smoke starts pouring out of the dashboard.
Yeah, exactly. We're talking about the logic that decides the who, the where, the how, and the who pays of every single business transaction.
Yeah.
If this system breaks, trucks go to the wrong cities, invoices go to the wrong companies, taxes aren't collected properly, which is just a terrifying thought for any business. Basically, the business starts to hallucinate.
Hallucinate. That's a perfect word for it.
Yeah.
It's the difference between a business that runs on autopilot and a business that requires, manual intervention for every single box that leaves the warehouse. Partner determination is the engine of automation.
So here is our mission for you today in this deep dive. We are going to move way past the which buttons do I click level. We want to understand the architectural philosophy behind this. Like, why does SAP split a customer into 4 different people?
Right.
Why is the snapshot concept, which we'll get to later, the most dangerous thing for a consultant to misunderstand? And how does a simple address change crash a massive tax audit?
We're going to cover all of that. We're going to open up the hood and get our hands dirty today.
Let's start with the actual problem, because I think in our modern one-click buy world, we take this whole process completely for granted.
Oh, we do.
Before sophisticated ERP systems like SAP, or even just in poorly configured modern ones, what does taking an order actually look like on the floor?
It looks like manual labor. And I don't mean lifting boxes. I mean absolute data entry hell.
Right.
Imagine you're a sales clerk in the 1980s, or even today in a bad system. A customer calls you up to order 50 widgets. You pull out a physical file, or you look at a green screen. You have to manually type their name. Then you have to ask them, okay, where do you want this shipped? And you type that address, character by character.
Wow.
And you ask, well, who's paying for this?
Yeah.
And you type that address. It's just endless typing.
That sounds like a recipe for absolute disaster. Finger fatigue, typos.
Massive error rates. You type street instead of road.
Yeah.
You put the zip code in the city field. You misspell the company name. But the real problem isn't just the typing speed or the typos. It's data integrity. If I type the address slightly differently than I did last week, the system thinks it's a completely new location.
Oh, I see.
Suddenly, your reporting is garbage because you can't aggregate sales by region. You have 50 variations of 123 Main Street in your database.
Right. So partner determination is the antidote to that specific chaos.
It is the automation layer. It's the system saying, look, I know who customer 1000 is. I know their legal entity. I know their warehouse stock. I know their accounts payable department. You just give me the ID number and I will determine, hence the name, everything else.
It's not just about saving keystrokes, though. It's about the consequences of those blanks being filled in correctly by the system. The research highlights 3 major stakes here: taxes, money, and logistics. Let's walk through those briefly just to set the stage, because I don't think people realize how much rides on this logic.
Sure. Let's take taxation first. In the U.S., and honestly many other places, sales tax is incredibly complex. It's based on where the possession of goods takes place.
The ship-to address.
Exactly. The ship-to. If partner determination picks the wrong address, say the corporate HQ in Delaware, instead of the actual warehouse in California, you are calculating the wrong tax rate.
And Delaware has no sales tax, while California obviously has a very high sales tax.
Right. So if you ship the physical goods to California, but your system taxes for Delaware, you are severely undercollecting. When the auditors come, and they will come, you are liable for that difference. That's not just an oops. That's a compliance violation and a massive fine.
Okay, that definitely got my attention. So what about money?
Money is really about risk and credit exposure.
Mm.
In SAP, we have a role called the payer. This is the entity whose credit we actually check.
Thick.
If you have a massive conglomerate customer and your system checks the credit of the tiny local branch instead of the headquarters, you might block a $1 million order unnecessarily because the branch looks broke on paper.
Yeah.
Or worse, you approve an order for a bankrupt branch because you checked the wealthy headquarters wallet.
So you're either killing legitimate sales you should be making, or you're shipping product you'll literally never get paid for.
Precisely. And finally, logistics. This is the physical reality of the supply chain. The ship-to-party determines the shipping point.
Right.
That tells the warehouse which specific door the truck needs to pull up to. It determines the route. Is it going by rail, by air, by truck? If you get the partner wrong, you might have a truck waiting at a dock in Hamburg for goods that are currently sitting in Munich.
Okay, so the stakes are sufficiently high. This isn't just admin work. This is operational reality. If the partner logic fails, the physical world fails. Let's get into the structure. The research calls this the functional hierarchy, or the Big Four.
These are the absolute pillars. You cannot run a standard sales order in SAP sales and distribution without these four roles. They are the mandatory minimums.
Let's meet the cast. First up, the sold to party, or SP.
The sold to is the alpha,
Mhm.
the main character. When you say, hey, I have a customer, you're almost always talking about the sold to. This is the legal entity that actually places the order.
They're the ones contractually bound to the deal, right?
Correct. They carry the legal liability. If you ever have to sue someone for breach of contract, you are suing the sold to party. But, and this is the crucial part of the puzzle that trips people up, they're not necessarily the ones who receive the goods. And they aren't necessarily the ones who pay the bill.
Which brings us perfectly to the second pillar, the ship to party, SH.
The physical destination. Like we mentioned, this drives the tax jurisdiction and the logistics. But think about the relationship here. One sold customer can easily have 50 different ship-to warehouses.
So the sold to is the umbrella, and the ship tos are all the physical locations underneath it.
Exactly. And keeping that hierarchy clean is one of the hardest parts of master data management. You really don't want to create a brand new sold to every time a customer opens a new warehouse. You just want to add a new ship to the existing sold to record.
That makes total sense. Now, the next two are where I think people get really tripped up. We have the bill to party, BP, and the payer, PY. To a layperson, getting the bill and paying the bill sound like the exact same action. I mean, if I get a bill, I pay it.
Right. In a B2C world, they usually are the same.
Yeah.
If you buy a book online, you are the sold to, ship to, bill to, and payer. You are the entire universe of that single transaction.
I'm the alpha and the omega of my book purchase.
You are. But in B2B, it's highly fragmented. The bill to party is just the administrative recipient. They are the ones who receive the physical or digital invoice document.
So they're just the mailbox.
Yes, essentially. It could be a physical address where paper mail actually goes, or an email address or an EDI endpoint where digital data is transmitted. But their job is purely to process the paper. They are the gatekeepers of the invoice.
And the payer, the PY.
The payer is the wallet. They are the financial entity responsible for actually settling the debt. They're the ones who wire the funds or cut the check.
Give me a concrete, real-world example of why you'd separate them. Why wouldn't the person getting the bill just pay it right then and there?
Imagine a large retail franchise. Let's say you have a chain of coffee shops. The local coffee shop manager on 5th Street needs to order espresso beans. He's sold to because he is the one placing the order, and he's a ship to because he physically needs the beans at his store.
Okay, he needs to make the coffee.
Right, but he also needs to see the invoice to verify he actually got the right beans before anyone pays for them.
Yeah.
So the local store is also the bill too. He gets the paper.
He checks the packing slip against the invoice. Got it.
Exactly. But that local store doesn't have a corporate bank account. He can't write a vendor check. All the money is handled centrally by the corporate headquarters in New York. So the corporate HQ is the payer.
Why does SAP care about the distinction, though? Why not just send the bill to the corporate office directly and skip the middleman?
Because if you send the bill straight to corporate, they have no idea if the beans actually arrived at the 5th Street store. They'll refuse to pay it. The local guy needs the bill to approve it, but corporate needs to be the payer, so SAP can check the corporate credit limit.
Ah, right. If you check the local store's credit, it might literally be 0.
Exactly. When SAP runs a credit check to see if this store can afford 20 grand in inventory, it doesn't check the store's wallet. It checks the corporate HQ's wallet. That linkage is vital. If you confuse these two during a project implementation, you're going to have invoices going to a finance team who has no idea what the goods are, or you'll be running credit checks on a branch office that technically has zero capital.
That clarifies it perfectly. So sold to is the boss, shipped to is the destination, bill to is the admin, payer is the wallet.
That is the perfect mental model to keep in your head.
All right, we know the players. Now I want to know how the game is actually set up. The research has a deep section on configuration logic. It describes this as a 5-step recipe. This seems to be the absolute bread and butter for the consultants listening.
This is the SPRO path. For those who don't spend their days in the system, SPRO is the transaction code where you configure the back end of SAP. It's the engine room where you turn the knobs and dials. The specific path, and you should write this down if you're studying for certification, is sales and distribution, then basic functions, then partner determination, then setup partner determination.
That sounds like a journey to the center of the earth.
It is a bit buried, yeah.
Let's walk through the recipe. Step 1 is define partner functions.
This is where you invent the roles themselves. We just talked about the standard ones, SP, SH, BP, PYY. But real businesses are complex. Maybe your business needs to track a forwarding agent, or a sales manager, or a specific contact person.
So you can actually create custom roles from scratch.
Yes, absolutely. You give them a 2-letter code, like ZM for zone manager or KA for key account manager. But the critical piece here, the thing you cannot get wrong, is the partner type.
What does the partner type do? It sounds like a category.
It is a category. It tells the system where to look for the data. If you create a role called customer, the partner type is KU. That stands for Kunde, which is German for customer. That tells SAP, hey, go look in the customer master database.
Okay, that tracks.
But what if you want to track the sales representative who gets the commission on the deal? They aren't a customer, they are an employee. So for them, you use partner type PE for personnel. That tells SAP, don't look at the customer table, look at the HR tables.
That's a massive distinction. If you get the partner type wrong, the system is literally looking in the wrong filing cabinet.
Precisely. It won't find the record. And there's also LI for vendor lieferant if you're doing something like a third-party dropship where a vendor is involved in the sales process. So step 1 is really just setting up the cast of characters and telling the system where they live.
Got it. Step 2 is define partner determination procedures, or PDP. The notes call this the bucket.
I really love the bucket analogy. Think of the PDP as a container. You don't need every single partner function for every single business scenario. So you create a procedure, a bucket, and you throw in only the specific functions you need for that one scenario.
Why would we need different buckets, though? Give me a scenario where they differ.
Well, compare a standard sales order to a returns order. In a standard order, you absolutely need a ship to party. You are sending physical goods out the door. But in a returns order, the customer is sending goods back to you. You might not need a ship to function in the same way, or you might need a return to location, which is your own plant.
Oh, I see. Or what about a purely financial transaction?
Exactly. Consider a debit memo. That is a purely financial document. You messed up the pricing, so you owe them money or they owe you. There's no physical movement of goods whatsoever, so your debit memo bucket wouldn't even have a ship to function in it. If you forced a ship to on a debit memo, the end user would be stuck. They'd be staring at a required field asking for a shipping address for a piece of paper. It's just terrible user experience.
So you completely tailor the bucket to the transaction type. Now, step 3 is assign partner functions to the procedure. This sounds like setting the rules for the items we just put in the bucket.
It is. Once you've put the functions in the bucket, you can tweak how they behave. There are 2 huge controls here you need to know. First is mandatory.
Self-explanatory, I assume.
Pretty much. If you mark Sol 2 as mandatory, the system will scream at you with a hard error and refuse to save the document if that field is empty. But the second control is the real superpower. Not modifiable.
How does that work in practice?
Let's go back to that corporate HQ pair scenario we talked about earlier. You want to ensure that for a specific franchise customer, the pair is always HQ. You want to make sure the local store manager cannot accidentally change the pair to himself to try and bypass credit limits. You can mark the pair function as not modifiable in the procedure.
So even if a user tries to click into it and change it in the sales order, the field is just grayed out.
Exactly. They can see it. They know who it is, but they can't touch it. It locks the partner so a user can't mess it up. It acts as the strict enforcer of your business rules. It protects the data integrity from the well-meaning but chaotic humans using the system.
I love that phrasing, protecting the business from the users. Okay, moving to step 4. Define account groups and assign functions. The notes call this the bridge and warn very sternly that it's a widowmaker for junior consultants.
It really is. I've seen so many projects stall here. This is where 90% of configuration issues happen when setting this up,
Why is this such a trap?
because it connects two completely different worlds in SAP. The configuration world we've been discussing and the master data world, which holds the actual customer records. Customers are grouped into account groups. Maybe you have an account group for domestic customers and another for international customers.
Okay, so maybe ZDOM and ZINT.
Right, exactly. You have to explicitly tell SAP in the configuration, hey, for the domestic customer account group, this ship to partner function is allowed to be used.
And if you forget to do that,
You can do literally everything else right. You can build the perfect bucket, set all the rules, create the custom roles. But when you try to actually create a customer master record and add a ship to address, the system will give you a hard error. Partner function SH, not allowed for account group ZDOM.
wait, so I could do all the back-end work perfectly, but if I miss this one bridge, the system just says computer says no when I try to add a basic shipping address.
Yes, it acts as a permission slip. And the error message is incredibly cryptic if you don't know exactly where to look. You'll be pulling your hair out looking at the sales order config, thinking you broke something there, but the problem is actually way back here in the account group assignment.
That is a massive pro tip right there. Always check the bridge. Finally, step 5 is assignment of procedure, the map.
This is just the final wiring. You've built your bucket, the PDP, you've filled it with roles, and you've set the rules and bridges. Now you have to tell SAP when to actually use it.
So this is linking the bucket to the specific document types.
Right. You go in and say, for sales document type OR, which is a standard order, use this specific partner determination procedure. You also do this for the customer master itself, for delivery document types, and for billing document types. It's telling SAP when you see this specific object being created, use this specific logic.
It seems very, very logical when you break it down like that, just step by step. But once it's set up in SPRO, there's still the question of how SAP actually makes the decision in real time.
Right, the runtime logic.
Yeah.
The moment the rubber actually meets the road.
Yeah. Segment 3 of our notes covers technical logic and precedence. So let's role play. I'm a user. I'm sitting at my desk. I open VA01 to create a sales order. I type in the customer number for the sold to party. Boom. What happens in the millisecond after I hit enter?
The engine fires up.
Mm.
The very first thing it does is look at the origin table. In sales and distribution, the absolute holy grail table for this is KNVP.
KNVP. We're getting into the technical weeds here.
Just think of KNVP as the structural DNA of the customer. It's the customer master partner functions table. It stores all the defined relationships. Customer 1000 is related to customer 2000 as the payer. The system queries this table instantly. It asks, who is listed as the ship to, bill to, and payer for this specific guy?
Simple enough, it just fetches the data. But what if there's ambiguity in the master data? What if I am customer 1000 and I have defined 5 different warehouses where I receive goods?
That's a great question. That triggers the selection screen. If the master data has multiple partners defined for a single function, like 3 different valid ship toes, SAP pauses the automation. It pops up a dialog window for the user and lists all 3 options.
So it actually stops and asks the human, which one did you mean?
Exactly. It forces a manual choice.
Is that good or bad design?
It really depends on the function. For ship to, it's completely normal and expected. You usually have multiple delivery addresses, and the user needs to pick the right one for that specific order. But for payer, it's highly risky. Do you really want a frontline sales rep choosing which corporate entity pays the bill? Usually you want that totally locked down. So seeing a pop-up screen for payer is very often a red flag of bad configuration.
Efficiency versus control. Always the trade-off. Now there's another layer here called header versus item logic.
This is critical for complex orders. The header is the general information for the whole order, like the customer name, the order date, the total value. The item is a specific product line, like 10 widgets on line 10 and 5 gadgets on line 20.
Okay, I follow.
By default, the partners copy straight from the header down to the items. If the header ship to is set to New York, then all the items on that order are going to New York.
Makes sense. Keep it simple. Ship it all in one box.
But real life isn't always simple. Suppose you are a massive construction company ordering materials. You want the raw lumber, which is item 10, to go directly to the active job site in Brooklyn. But you want the highly expensive power tools, item 20, to go to your secure warehouse in Queens.
Can SAP handle that routing in a single order document?
Yes, it can if you enable item-level determination. This allows you to say, okay, the main order is for this one customer, But line item 10 goes to Brooklyn, and line item 20 goes to Queens.
That's huge. So I don't have to create two completely separate orders just because they're going to different warehouses. That saves so much time.
Correct. It's a massive convenience for the customer and the sales rep. But in SAP, it seriously complicates the logistics on the back end.
How so? What breaks?
Well, because now, when you create the delivery note, which is the instruction to the warehouse to pick the goods, SAP has to split that order. It cannot physically put Brooklyn items and Queens items on the exact same truck. So one sales order automatically becomes two separate deliveries.
And potentially two separate invoices.
Maybe. Which leads us perfectly into the advanced concepts for experts in Segment 4. We really need to talk about the billing trap. The notes mention VBRK versus VBPA tables.
Scenario A is billing. The notes refer to the payer and bill to as the queens of the billing document. Unpack that analogy for us.
So in the sales order phase, the sold party is king. Everything revolves around the customer who is placing the order. But once you move down the pipeline to the billing phase, creating the actual invoice, the power dynamic shifts completely. The crown passes.
To whom?
To the payer and the bill to. They become the absolute dominant fields. And here is the trap. Usually partners copy smoothly from the sales order directly to the billing document. But SAP has a hard, unbreakable rule. One invoice can only have one payer and one bill to.
That makes physical sense. You can't mail a single piece of paper to two different addresses at the exact same time.
Right. But remember our construction example. If item 10 has payer A and item 20 somehow has payer B, SAP cannot combine them into one invoice. It will force an invoice split.
So the customer suddenly gets two invoices.
And they might not expect that at all. They might reject the invoices because they don't match their single purchase order. Or your own accounting team might ask, why are we generating double the paperwork and paying double the postage? Understanding that changing partners at the item level triggers downstream invoice splits is a key expert insight.
That's a really subtle ripple effect. You change an address on line 20 just to be helpful to the customer, and suddenly your finance department is yelling at you next month.
Exactly. You fixed the immediate logistics problem, but you completely broke the accounting process.
Let's talk about HR integration, scenario B in our notes. We touched on this briefly with the PE partner type. This is mostly about commissions, right?
Yes, heavily. This is one of the most common requirements I see on projects. A client will say, we have 100 sales reps. We need to pay them variable commissions based on what they actually sell. How do we track that in SAP?
And I'm guessing the amateur answer is just put their name in a free text field.
Oh, please never do that. If you put John Smith in a text note, you can't report on it. You can't sum it up at the end of the month. It's completely dead data.
So what's the professional answer?
You treat the sales rep as a formal partner in the transaction. You create them in the HR module using transaction PA30 or as a mini-master record if you don't run full SAP HR. You give them a dedicated personnel number. Then you use that partner type PE we talked about. You add a function like SR sales rep to your order bucket, your PDP.
And what's the ultimate payoff for setting all that up? Why go through the trouble of linking modules?
Reporting. Structured, actionable data. If you do this correctly, you can go to a standard transaction like VA05, the list of sales orders, and you can run a report that says, show me all orders this month where John Smith was the sales rep. Boom. Instant commission report. Total value. Perfectly accurate.
That is powerful. Instead of keeping a messy spreadsheet on the side, it's baked right into the operational data.
Integrated operations. That's the entire goal of an ERP.
Scenario C is cross-company partnering. This sounds a bit like Inception, one plant selling to another plant.
It's intercompany sales. It happens all the time in large global conglomerates. Imagine you are the sales organization located in France. You take an order from a local French customer, but you don't actually manufacture the product in France. The product is made by your sister plant over in Germany.
Okay, standard supply chain setup.
The German plant ships the physical goods directly to the French customer. But legally, the German plant sold the goods to the French sales org, who then formally sold them to the end customer.
So there's an invisible internal transaction happening behind the scenes.
Yes. And to make that happen systemically, the German plant needs to treat the French sales org as a, wait for it, customer.
So you have to set up your own internal department as a customer in your own system.
You have to fake it, essentially. You create a customer master record for the French sales org. You assign it standard partner functions. This allows the system to generate an intercompany billing document, an IV type. It facilitates the money seamlessly moving from the left pocket to the right pocket of the overall corporation.
That is a bit of a mind bender, but I can totally see why the system logic necessitates it. The system absolutely needs a buyer and a seller to move money, even if the buyer is technically yourself.
Rigid is the right word for it. SAP is completely logic-bound. It doesn't intuitively understand internal transfer unless you frame it in the strict language of a standard transaction.
All right, let's get to the mud here. Segment 5 is troubleshooting. The consultant's survival guide. We've all been there. Something isn't working right. What are the most common failures you see?
Well, we already talked about the account group trap. That's usually issue number 1. Always check step 4. But let's talk about issue 2, the missing partner. You create an order, and the payer field is just dead blank. The system didn't pull the info at all.
Why wouldn't it auto-populate?
You have to trace the logic backwards, step by step. First, check the master data. Is a payer even defined for this customer? If yes, then check the procedure, the bucket. Is the payer function even assigned to the bucket for this specific document type? I've seen people create a brand new rush order document type and just completely forget to assign the correct partner procedure to it.
So the system is looking for its instructions, finds a blank page, and just does nothing.
Right. It's looking for rules that simply don't exist.
Now, issue 3. The notes call this the snapshot problem, and they label it as a crucial insight. This feels like the philosophical core of the entire episode.
It is. This is the concept that really separates the experts from the novices. This is the most important concept for anyone dealing with data over time in an ERP.
Set the scene for us. What's the scenario?
Okay, a customer calls up and says, hey, we moved our offices. Our billing address is now 456 Oak Street. You go into the customer master, transaction XD02, and you update the address. Easy.
Done. Problem solved, right?
Then the customer calls back a week later, and they are angry. They say, you sent the invoice for that order from last month to the old address. You look at the order in the system, and sure enough, it still has the old address. You think to yourself, but I updated the master data. Why didn't the order update?
Is it a bug in the system?
No, it is a fundamental feature. Partner data is snapshotted into the transaction tables, specifically table VBPA, at the exact moment the order is created.
Snapshotted, so it literally takes a picture of the data as it existed at that exact second and freezes it forever.
Yes. And you absolutely want it to. Think about it legally and auditorily. That order from last month was, in fact, billed to the old address. That is a historical fact. If changing the master data today retroactively updated all historical orders, you would be falsifying history. You would lose the actual record of where the invoice actually went.
That is profound when you think about it. The master data is just a template. The transaction data is a legally binding historical record.
Exactly. When you create an order, SAP copies the template and pastes it into the order document. After that millisecond, the link is permanently broken. They are now completely independent entities.
So if I actually want to update the address on an open order that hasn't shipped yet,
you have to go into that specific sales order and manually update it there, or trigger a manual redetermination. Changing the master data will only ever affect future orders created from that moment on.
that is such a vital distinction to grasp. Dynamic master data versus stored transactional data. If you don't get that, you'll be endlessly chasing bugs that aren't actually bugs.
And you'll be constantly confusing your users. You have to patiently explain to them, look, the order is a historical document. It reflects the truth of the moment it was created.
I really love that phrase, the truth of the moment. Let's wrap up with some high-level strategy. Segment 6 is about strategic implementation. If I'm a consultant on a project or even a business analyst, it's not enough to just know the SPRO menu paths. I need to know what to ask the business.
Right. You cannot configure what you do not understand. The worst thing you can possibly do is just set up the standard SAP defaults and blindly hope for the best. You need to thoroughly interview the business. You have to be a detective.
What are the killer questions you always ask?
Question 1. Do your customers order for multiple locations?
Why do you start with that one?
Because if they say yes, I know immediately I need to set up the ship to hierarchy and I need to train the users on that selection screen pop-up we talked about. If I don't ask, they'll go live, try to ship to a new branch, and realize they only have one corporate address in the system. Everything halts.
Good one. What's question 2?
Does a third party ever pay the bills for this customer? This immediately fleshes out a payer versus bill to complexity. If they say, oh yeah, sometimes the parent company pays, sometimes the local franchise pays, then I know I need to be very careful with my setup and maybe deeply look at those not modifiable flags to prevent massive user errors.
And the third question?
Do you need to capture sales reps or brokers directly on the order?
Always follow the money.
Always, always follow the money. If they have a complex commission scheme, I absolutely need to know now. I need to set up that PE partner type. If I wait until 3 months after go live and suddenly they ask for a comprehensive commission report, well, you can't report on data you didn't capture. You can't just go back in time and effortlessly add a partner to thousands of closed orders.
Because of the snapshot.
Because of the snapshot. It all comes full circle.
So it's really about anticipating the complexity long before you start building. Implementation strategy is about excavation. You have to dig up the requirements that the client honestly doesn't even know are requirements yet.
Exactly. You have to guide them to their own business rules.
Well, we have certainly excavated a lot today. Let's recap. Partner determination isn't just a simple list of names. It's the core logic that binds the who to the what.
Governs taxes via the ship to. It governs financial risk via the payer. It governs physical logistics via the shipping point. It really is the engine behind the deal.
And we learned that the configuration is a strict recipe. Define the roles, build the bucket, set the rules, build the bridge to account groups, and finally, map it to the documents.
And carefully watch out for that account group trap.
Absolutely. And remember the snapshot? The order is a history book, not a live newsfeed.
That's the biggest takeaway for me.
So here's a final provocative thought for you to mull over as we close out. We talked heavily about how the snapshot freezes data in time to preserve historical accuracy, right? Well, we are rapidly entering the age of AI and predictive analytics in ERP systems. These AI models largely train on historical transactional data. If an AI looks at your massive sales history to predict future customer behavior, is it looking at the current reality of that customer, or is it learning from the ghost of who that customer used to be?
Wow. That is a fascinating problem to think about.
Right. If the snapshot perfectly preserves the old address and the old payer, the AI might learn that shipping to New York is completely normal, even though the customer fully moved their operations to Texas last year. Does the systemic stability of the snapshot actually poison the predictive model? Or is historical accuracy actually data drift in disguise?
That is something to seriously think about. The tension between historical truth and current relevance in an AI world.
Something to mull over. Next time you see an address auto-populate on your screen, take a second to appreciate the logic engine firing underneath. It's doing a lot more work than you think.
And always check your payers.
Thanks for joining us for this deep dive. See you next time.